Alright guys, GV Sitfolio Silver Stocks episode 3 part 2, one more part after that. So right now we are in the normal tier, the small tier a few days back. Now normal, check it out guys. I have my monthly defined setup, Ichimoku cloud, volume profiling, 1 year, 3-year moving average. Just the good mix of reduced noise and just be able to capture the turn. So when you're above, look at that explosion above the 1 year and 3-year moving average, and then you still get dragged back down because until the price action starts turning back up, there's still the momentum still has to build up. But the longer it stays above that 1 year and 3-year moving average, and you see higher lows, beautiful. And right now, the earlier you get it in the uptrend, the more confidence you have that these lows are not going to be reversals, not going to break down, that there actually be buying opportunities. So the first one, it proves that you're in uptrend, higher lows, confirm, turn, pull back, and this is just a beautiful consolidation. Look at that. If I draw horizontal line, breakout, retest, inclining 1 year moving average. And now what's slowing it down actually is this. It's the cloud, Ichimoku cloud defined resistance. So we're trying to go through it. So now you have the forces, the base, the volume defined base. Look, all that price action here, all those weak hands getting out, all the people that got trapped. And now we're trying to go through that cloud. So a lot of people won't believe it, but this is where a lot of early entries could happen right here. And once you grind through that, then it really explodes upwards, guys. So for CMC, here's my, let's do a measure move. Log targets are the best. Greedy. So here's my target, beautiful target. And I also love when it matches up with previous wall, previous support, turn resistance. I love the harmony, the synergy of those targets. And right now, CMB sitting at 15.5, target 61. So that's a 3-4 bagger, 3 or 4 bagger right there. And imagine once you're going to be out of that, reach that target, depends where. So see here, right here, could actually skyrocket up and you'll still be in the cloud. And then you'll get a pullback. Why am I getting a pullback? Well, maybe you're getting a pullback because you're still in that monthly defined Ichimoku cloud. And look at that. Break. Oh man, where's my line? Where's my line? So right here, breakout, and then retest this wall, previous resistance, now turn support. And next time, so after we get out, this will be the insanity move to the moon. So that's it for CMP, guys. Looks pretty good. Blackrock monthly chart. This thing has exploded. Look at that. Same thing as CMB. You know the scenario I imagine here, just like that. The precision of the cloud on the monthly, the more I'm studying it, the more I'm its power is overwhelming. Oh, you think you're out of, look at that. Look how it perfectly brought the price action down, candle per candle, never able to close. And remember, this cloud was defined back here, projected in the future. Here you have it below. So you have the forces, the bullish forces pushing it up from under. So inclining 1 year and 3-year moving average. You can't close below the 3-year, some volatility below the 1 year. And that's fighting the Ichimoku cloud, trying to bring it down. So it gives you a good area to know where you might slow down. And exactly what I think is going to happen for CMB is already happened for Blackrock. And look what happened when it's out. To the moon. Come on, Pat. Can't get to the moon. Look what happened. Went above all-time highs. So CMB, this is its in future. Pretty much what Blackrock has just done. Just beautiful stuff. Yeah, I don't know what to do with Blackrock because now it's just exploded. So it's consolidating. And after that, you're going to have to look higher. Fly me to the moon. Or maybe I could do it another way. Here. Pull, flag, pull, something like that. Yikes, yikes, insanity, insanity. All right. SSVR, guys. Where's my data? I'm gonna have to go on the daily. Suma Silver Corp. Higher lows on the daily chart. I don't have more data than that. I think they relisted, right? They changed. They're on the TSXV, on the CSC before. Oh boy. Here is a breakout. Higher lows. Broke out. Daily closed above. And yeah, I wish I had more data for that one though. Oh wait, let's go to the cloud. Ichimoku cloud. Yeah, not much to go on, guys. Suma, let me see. Let's try to find the original one. No? On Neo? Ah, yeah, that's the one I remember. April 21st. That's today, right? Yeah. I don't know what the other listing was. All right, so this is pretty good actually on the daily. Trying to go back above. And right now, if it could get out of the cloud, you still have a huge volume defined base. So this is not the same type of structure as CMB. It's more of a sideways coiling action. Where's my line? Coiling, coiling, coiling. So once it busts up and you're in a silver precious bulls era about to turn back up, so you have to put the probabilities that Suma will explode higher. And once it's out of that cloud, look, there's a vacuum here. Who knows how high that's going to go. Suma DMX. All right, let's go back on the higher time frames. Look, I could go on the smaller time frames and do a whole bunch of charts, but it's going to give a lot of value for a trader. But the bull run is going to be so much longer than a trader holding a few days, a few weeks. And the probabilities of charts on the smaller time frames of reaching those implied moves is less. There's so much more wiggle. So you get less precision than going on the higher time frames. So you got to choose your poison, guys. Reduce the whipsaws, stay on the higher time frames, less leverage, but hog the big moves over a long time. Or shoot multiple bullets, a machine gun on the smaller time frames, and pray for the best. You have to choose that, guys. So here is Insanity breakout line. Huge, multi-decade top line. Higher lows, 2015, 2019. Now above a 1 year and 3 moving average, above inclining Ichimoku cloud. The base is really low. So this thing is really trying. What's the next step for district metals? What I'm seeing right here is explosion, consolidation, 3 months consolidation, explosion, 3-4 months consolidation, still inclining 1 year moving average. And this will probably be the next targets, bringing you higher and higher, closer to that $1 mark. Right now, sitting at 43 cents. Still in an uptrend on the. This is low risk entry right here. When you're close to the 1 year moving average, first time you prove you're in an uptrend. Second time, usually that's your good opportunity. And the higher you go up, the more risk you have of having a severe pullback. So as long as this is closing above the 1 year moving average, it's looking pretty nice. SAE Sable. Look at Sable. Beautiful. Is that like CMB? No. This one's another type of pattern I've seen elsewhere. Beautiful higher low. Look at that. Trying to go through the cloud. It's going through the cloud. See, even back in 2018, really tried to go through. But look at that cloud, just pressure. So you have those two forces. You have the inclining 1 and 3 year. Then you have the cloud pressure. And often the first violent reaction off the bottom it's not a V shape all the way to the moon. This is what happens. So it's a wake up, bottom. Market says, look, this is way too low. And then there's two forces clashing, sideways move, weak hands get out, transitions. And once all that's evaporated, then it explodes up. So it went back down. Oh, it's the end of the world. And look at that. Turnaround, higher lows, a wick, extenuation wick on the monthly. You have to consider that very bullish. And now you're above volume defined base node, inclining bullish cross, 1 in 3 year. It finally had it pull back. The entry of your life for Sable was last month's close, right there, that wick touching that. And right now, if it close above the green cloud, this thing is to the moon. Yeah, to the moon, Pat. He keeps saying that. He keeps saying that, but months go by. Nothing's happening, Pat. Well, like I always say, on monthly candles, if the market decides to take 1 or 2 or 3 months more, it seems an eternity in your life when you look at Twitter every single day. But on the chart, it's just going to be a few candles. Of course, this could have maybe continued up once it broke out here. But the market decided usually 1 to 3 months, there's a pullback test. And it decided to do it. So don't be over leveraged. Be patient and get a hobby. Patrick, you're not fair. Come on, Pat. Don't stop saying that. Look at that beautiful target in that congestion area, 140. So Sable is a pretty sweet deal right now. Low risk entry, high reward. $1.40 target just to get it started, and it just did its pullback. This one is pretty insane. The timing of that one, then very high hopes for Sable. SSV, look at that, almost like Sable, higher lows. Tried violent explosion. Forces, 1 in 3 year forces fighting the descending Ichimoku cloud. Bar back under. Explosion out of the cloud, above the cloud. Bullish cross. Pullback. Violent pullback, 4, 5, 6 months. And still inclining 3-year moving average now above the cloud and starting to create green cloud here. And look at that huge, you're just about fair value node. Man, look at the vacuum. Look at the base here. Look at all that volume. Lots of transactions. All the weak hands are out, guys. This base means it's the angle of entry is the angle of exit. So 60 degree. And let's say it goes back out here. 60 degree. So right now, SSV is sitting at 45 cents and a half. Target 334. So what is that? 8 bagger. Can't even multiply. And all that by December 22nd. And that's a logical on the log scale. The long term, it's like it always flans out, right? But for these stocks that are uber low, just exploding out, just like at the beginning after consolidation, the angle of entry often is the angle of exit, especially when you have a bullish base like this, which has a higher low and it's just been retested. Jesus, man, which one's better? SSV or Sable? I don't know, guys. Those are two pretty sweet deals right there. EQTY metals. Yeah, that one I don't know what happened here. I have a hard time analyzing this one. I always like, look how it broke the cloud. So all I see now is a huge volume defined base, which pretty much once you're out of the 23, if you close above 23 cents, let's get a little more conservative, or 25 cents, close back above that, then maybe this could really skyrocket because that's a huge base. So forget the noise. That is the base in progress. Angle 60 degree. So let's say close above here, 60, same height, measured move, 60, yeah, something like that. So let's say $1.80 target, and once it breaks out above, right now it just trying to close above that 1 year moving average, inclining above huge volume defined base, somewhere in 2023, Q1, $1.60. Man, 19 cents. What is that, 10 bagger? Almost, right? 8 bagger, 9 bagger, just throwing out baggers around. So much fun. Patrick, you're not helping my greed. Okay, so you see first violent reaction, very tough. So this one's strike point gold. It's kind of like Sable, like the first time they did that violent up move, violent hitting that cloud, but inclining 1 year, flattening 3-year moving average. Where's my volume defined base? What's helping them maybe to shorten that consolidation, that sideways move, is the fact that the precious bulls market really has started, about to resume its uptrend. So right now it's all cylinders on high. The early birds that explode, I like it even better because they're going to explode early in the bull run. They might consolidate during the bull run and have another shot at it later in the bull run. The ones who explode later, they might have one good run and they might not have time to do a consolidation and then do a second strong explosion before the bull run ends, or there's a severe pullback in it. But right now it's fighting to stay above that volume defined node at 19.5 cents. It's almost smack on it, 20 cents and a half. Let's see where the month closed. But this is a pretty violent bull flag, pull flag. I see those everywhere with insane targets if this thing could really explode. $1.60, it's at 20 cents now. It's very violent for Q4 this year, $1.60. So I don't know if it's going to do 8 times, especially if there's that cloud there. But it's definitely carving in higher lows. So keep an eye on strike point gold. Golden tag. Oh, well. Golden tag. See what happens once you're out of the cloud. Close above the cloud, above an inclining 1 year, 3-year moving average. Look at this beast, man. It's already at the top of the rail. Already at the top of the rail, creating huge base, consolidating right below it. So that's when you bring your chart down and you do some crazy measure move like that. So you're not off the bottom, so maybe the log move could be a little harder, could take a little bit more time. So before you get like a 2,000% move all the way to about $14, $14.40. Now it's at 40 cents. What the hell is this? 8, 10, 20 bagger, 40 bagger. Is this a Kirk Lake land gold? Jesus. Look at that. Yeah, that's pretty violent explosion. So I'm not quite sure what to make with this. Honestly, it's closing. A close above this breakout line will be uber bullish. So you got to wait to see how much time it's going to consolidate here. And yeah, GOG has had a violent explosion. The ultimate buy was right here on this candle right here of this base. So at 10 cents, 10.5 cents, this was a buy. So look at that base. Higher lows, carving a beautiful base, multiple tests. That's what you want to live through. So this one is kind of GOG showing you the future of what many of these other stocks that are about to explode, like Sable, SSV, like they're eminently, Patrick, use better words, showing you the future of what happens when the pressure cooker just explodes and you go hit some all-time resistance and then you slow down. So golden tag looks very promising. Look at that. Is that another like golden tag? Explosion off the base. I don't have a lot of data for GR. But that's what you want, a base. Get in early. Nobody likes the stock. Even here, that was the breakout candle right there above previous all-time highs. Above inclining 1 year, 3-year moving average, explosion. Look at that. Never closed below the 1 year moving average, explosion. So now it's consolidating while others are starting to explode, and it's going to get a second run. So if you were early in this GR, those powerful stocks that went strong before the other ones, they were consolidating a little bit. The other ones, the laggards, are going to explode now, and this one's going to get another shot to continue higher as soon as it's ready. Look at that. $2.80 something in Q3, Q4, man. 2021 is going to be explosive for precious metals, no doubt about it. Avino silver, See, gapped up, closed below, back in the cloud. Didn't quite make it. Another one of these, man, hogging, important. So imagine those other bases that we saw, let's say in SAE or SVE at the bottom after a huge drawdown. These GOGs, these GOG stocks or ASM, they're hogging multi-decade bases. Look at that volume defined base. It's huge. Let me see what I could do here. Volume defined base, right? We're trying to go back above it. Exploded, now above a 1 year, 3 year. You see how it pulled back to that golden cross, exploded up, now closing, try to close above that 1 year moving average, inclining. But you have the Ichimoku cloud defined resistance. You see how it brought it down to almost perfection? Look at that, hogged it down. He's going to try to push it down, but now you have that force of that inclining 1 year moving average. If it could close back above that volume defined node at 170, 180, then after that maybe get some momentum and then hit the target would be honestly that $4. So double bagger, Pat. How are you talking double bagger? Doesn't make sense. See, even the measured pull flag pull, if it could bust through, especially if it closes above 180 on the 185, 180 on the monthly chart, there's a vacuum, so stuff could really accelerate fast. And you've seen it before. Look at these explosions in 2-3 months. I don't know 100%, 40% a month, 40, 70% a month, 63% a month. This could happen very fast, and by Q4, Evino could be at the $4 breakout line right here. And then if you really want to get your greed up, well, you know what I'm about to do. This move probably of these bigger bases could probably be post the 2024 low we're going to get, or whenever we have it, and then for the end of the bull market where we're really coasting and all the capital flows are really going to hard assets, precious metals. These are the multi-year moves that could happen after. So all we're doing now is just the prep to setting up these bigger patterns where he's going to give these crazy targets for later during the decade, those $38, where these companies become a huge market caps, dividends, and whatnot. Those huge move, guys. It's just going to be insane. So that's it, guys, for GV's part 2 of, and I can't wait to do the top tier. It's going to be insane, guys. All right. Hope you enjoyed. Subscribe. Don't remember, I'm contributing exclusive charts to Silver Chartist's report, Steve Penny. And me and Kevin, we're doing a masterclass exclusive. Right now, it's limited to 10 people per class, super intimate. We have 2 classes. I think there could be one more place open there. So don't hesitate to email me or Kevin to see if we could fit you. And can't wait to share with you guys all this stuff, man. Take care. Bye.